Hey guys, this is Brian Jones. I'm here with Chris Hood, professional options trader, guru, world's most interesting man. What's up, man?
Oh man, I'm good. I'm just looking forward to the day that I have the world's best haircut. I've got a
Yeah.
feeling it's coming. I really feel like it's coming. It's summer. I've got sun on my arms. I walked out the other day and everyone thought I was a disco ball. I was so pale. It was like, "Are you sick? Are you sick?" So
Yeah, you got to
no,
get out of the house occasionally. Walk
you
around.
know what? At the moment, during COVID, it was funny. The only time I actually left the house was Thursdays. So it would be Thursday, I'd be out of the house and I'd go down to the post box, the mailbox down the road. So that would have been a sort of venture during COVID. But I can feel jiu-jitsu is near. It's near. I've got the feeling. I'm getting the tingles.
Yeah, you got the guy choking the other guy out on your shirt too.
I'm wearing this in solidarity for all my Canadian friends and brothers that haven't been able to train for the last couple of months, man. It's been horrific. Like, honestly, I think that the sport is now 10 years behind the US. It's going to be really, really difficult to catch up. I did get an email that the IBJJF are having their World Masters in November. And I was like, oh, can I get there? And I've got 719 pounds that I need to try and lose before I'm eligible for super heavyweight. So I'm gonna have to probably wait an extra year. And my knee keeps clicking, so I'm gonna have to maybe I don't know. But I'm keen. I'm very keen to just get back on the mats and do
Yeah, for
something.
sure, man. I've been training a little, fairly regularly. So,
Lucky you, man.
yeah, you would do it if I were locked down.
If I had the facility, yeah,
Yeah,
I would probably have done it. But you know what? The thing is, when you're in a situation like this where there's this pandemic, if your support circle is not very big and it's just the three of us here, right? We don't have family here in Canada. It would be really difficult if one of us got sick, So, you have to sort of trade that off and everything. But the light is at the end of the tunnel. It ain't a train. It might be the Fed talking later today. So, be careful. This is a crazy week, man. This week and next week, hold on to your britches, as my
so
grandmother said.
this is the quadruple or triple witching, right?
This is it. Yeah, once a quarter we get these sort of special gifts from the market gods, and it's here to test your resolve and your patience. Because yesterday was about as exciting as watching three octogenarians try and do the triangle. Um, no offense to octogenarians, but it wasn't really an interesting day until about the last 20 minutes. I think in the last 20 minutes, someone did something. They must have pushed a button. I think someone actually fell asleep at their keyboard, hit their head, and it was the buy button
Right.
because
It's
everything
face
just
planted on the keyboard.
face plant straight into the keyboard. Someone at Goldman Sachs is losing their job today. No, it was a pretty interesting 20 minutes, the last
So,
20 minutes of yesterday. So
can you give us a little information, like just for people that are kind of confused about what exactly triple witching is? Like, why does it kind of throw the markets into a
it's almost the achievement of pricing, right? So what happens in the options market is, remember, options where you have this concept of max pain, where most people are going to lose, right? Prices become magnetized towards those levels, coming on the way down, moving on the way up. So you see prices sort of oscillating around these strikes of these options on the expiries. We also have the rollovers of futures contracts. So closing of the one, rolling it into the other. It's almost like a degree of, I wouldn't say it's artificial volatility, but let's just say it's volatility maxed out. So it's going to be choppiness, right? You're going to have up, down, up, down, up, down. So for people that are not sitting in front of their screens watching every blue and green tick or red and green tick, it's sometimes better to just sit on your hands. Don't try and get in front of these things. If you try and front run anything during this period, you're going to mistime it. And, the last thing you want to be doing is buying in at the top and then all of a sudden you get chopped out. So, sometimes it's best to just stay on the side, let the volatility play its way out. We saw going into this week, we had the VIX really, really low underneath the second Bollinger. Now, all of a sudden, it starts to spike up a bit. You've got to be aware of these things. So for people that are sort of confused, like, why does this matter and all of that? Long story short is it's just the rollovers of these contracts on the future side. It's the expiries on the options market. You've got it across the futures, you've got it across the stocks, you've got it across the indexes. There's just a lot of chop. It's like being inside a washing machine. So, a lot of people find, particularly novice traders get excited by volatility when it's volatility to the upside. When it's positive volatility, everything's moving up. Oh man, this is great. Yesterday it was up 10, now it's up another 20. They get the FOMO bug that gets into them. So mentally they go into it going, this is how it's always going to be. If you haven't traded multiple cycles, then this is new to you, it can be quite exhilarating. It's like, oh, I bought in at 10 cents and now it's 16 or whatever it is. You'll get spat out eventually. At some point you'll be minus 100% and you'll be spat out of the system. So sometimes it's best to just sit on your hands and be patient, because the whole idea of trading, it's about consistency. Okay, and consistency also means consistently not losing. Like we often think of consistency as only winning. Consistency also means don't lose, because if you start losing, you can consistently lose. So
right.
There's a problem. If you just take the word consistency, it applies to both winning and losing. You need to consistently not lose, which means you're going to consistently win. Now, with the losing thing, mentally, I look at it like this. When I do an options trade, I assume I'm going to lose 100%. All right. When I go into a trade, I'm saying, you know what? If I lose 100%, that's okay. All right. So I size it small enough for me to tolerate that loss. That's the first rule. Then I manage the trade. And if I get out with only losing 35% or 25%, for me, that's a win, because I'd originally thought I was going to lose 100. I've managed to save myself 75% on that trade by not losing it, right?
Right. That's a good way to frame it in your head.
Mentally, it stops you from getting frustrated at losing. Because a lot of guys get frustrated in they'll win, let's say, 6 easy trades. They make a bit of money. Then they have one bad loss that they didn't manage and they give it all back. And now we're halfway through the month. And then they go, I'm halfway through the month and I'm still flat. What do? They start doubling up on bad setups in order to catch up for what they've lost. So you can't trade like that. If you get into that mentality, stop, sit on the side, paper trade, get your head straight, and then go back. Even if you have one bad month, I have never met a trader who's always profitable. Never. It's like, it just doesn't happen. I've met guys that have been unprofitable for 6 months, and then in 2 months, they make up all the money that they lost in the 6 months plus more. So one thing I was mentioning to a client yesterday is when you trade, you always have to remember you are one trade away. One trade away. That's it. You're one trade away from a life-changing trade or a trade that will change your year, which is why you can't stop. You can't just say, oh, well, that's it. I'm done. I'm out. I'm going to go and, I'm taking my ball and I'm going to go play on a different field. It's a very, very difficult thing to stop, because the next trade could have been the trade that turned you into Elon Musk or Mark Zuckerberg.
Right.
Just talk about Mark Zuckerberg. Did you see Roger Waters at this press conference in London or Spain, I think it was?
I didn't see that.
Oh my God, it was hilarious. Apparently, Facebook sent him a request saying they wanted to use the song Brick in the Wall for some advert for Instagram. And, there's the song that talks about non-conformity and, we don't want to be part of your machine, being used by the machine, it's like, and he basically gave Zuckerberg the double bird and, used very, very polite language, words that rhyme with duck, to describe what he should be going to do with himself. So
taking a lot of heat. There's a lot of, I don't know, it's kind of interesting how, when social media started out, it was like YouTube and Facebook, and it was just sort of the Wild West. You could put whatever you want and everything, and now they just hammer down, and it's not only a data mining service, but it's also there's a lot of censorship on there. Whatever you like.
Well, he was saying, and I think Roger Waters is a phenomenal artist. He's incredibly creative, great musician. he turned around and he said, how could a guy that initially started off going, she's hot, give her a 5, she's not, give her a 1, how did that idiot become so powerful? You ask yourself, and this is the kind of society that we are. I mean, I had a little bit of a shindig celebration when I heard the Kardashians had been taken off the air. Like, I am like extremely excited, but what I'm worried about is what garbage they're going to fill the space with, right? Because from one garbage to another,
people just want I don't know, they want to be entertained. It's just, I don't know, I can't even watch, like, honestly, I don't watch television.
Well, I have decided, though, I've missed my calling, because what I should be doing is calling out Floyd Mayweather or Jake Paul or something like that. Like, I think, you know what, here we are in our chat. I'm going to say, you know what, Jake Paul, I'm a 50-year-old options guy that's been sitting in a chair here. I watch my screen. I'll take you on for $30 million. If you want to put me in a ring for $30 million, I could beat him. Let's see what happens. Maybe it could be the biggest payday.
Yeah, man, that'd be awesome. Like, you guys could do a boxing match, and then you could have an options trading contest.
Well, you know what we do? We do it. I cannot understand.
It's like chess boxing. You know what I mean? Like, you trade in between rounds.
But I don't get this. Here they are. These guys are boxers, right? Mm-hmm. And we've got these MMA guys who are going in to fight under their rules. I say, screw that. Put them into an MMA cage and have a best of 3, right? So you have a boxing match, then you have an MMA best of 3. First one to win 3 matches. So you've got to win at least 2 in a sport, in the discipline that might not be yours, right? So
I like that. Yeah.
That to me would make sense. But watching these YouTube, baboons, what are their claim to fame? It's like that Charlie, what's his name? Charlie Zalanoff. Did you ever see that dude on YouTube that used to walk around saying he was a world champion boxer, and then he would haymaker these guys in the ring? Like, he would videotape it, like, while these guys are like putting on their gloves, he'd like, wah, wah, like this, and he'd knock them out. And I think he had some sort of, mental disorder, but it's crazy that we make celebrities out of these guys. That apparently the one dude went and drove over a turtle or something like that. He killed a turtle and he's now being fined or something. Anyway, we really need to, as a society, stop idolizing and making celebrities out of stupid people, because it's the dumbing down of the universe. Like, really, go and hang around with people who can spell. Like, that's the thing that I would say, is make sure the guy can spell, then he can talk properly, then he, at least he's got an education. Really, it's just so frustrating. Those Kardashians, like, thank God we are rid of them. Thank God we're rid of them. Really. Hopefully they watch the show. I mean, Kim, really, Kanye. I'm so tired of hearing about these people. It's just, oh my word. You turn on the TV and it's E-News. I mean, like, do we really care? Like, at some point, you remember at the beginning of COVID, when all these people were talking about how hard their life was in their 19-bedroom mansion in Beverly Hills with 19 servants. Oh my God, I can't survive because I have to wash my own clothes.
Little tear.
Oh, jeepers.
So, yeah, I mean, it's ridiculous, but I don't know.
One thing I wish I could do is take the squeeze indicator and stick it onto celebrities to determine when they're going to disappear. Like, maybe that would be an idea.
So what kind of trades are you looking at right now? Like, what do you think about, I'm curious what you think about the commodities.
I like it. I think China's playing a game at the moment where, they're sort of preventing stockpiling, and, I think that's affecting the commodities market a lot, because, obviously China has an interest in keeping prices down. They don't really want consumer inflation. In a country that's already got 1 billion people, you've got to keep the farmers happy, man. You can't just let the cost of living rise. So in China, I think they were starting to discourage stockpiling of commodities. So you're seeing some weakness in it. But let's be clear, there's so much money being printed that the commodities markets are going to continue in their upward trend, no matter what manipulations are going to happen at the consumption level. So, there's a longer term trend there. There may be some short term pullbacks which provide good buying opportunities, but stay clear of trying to be a trader that bases all their judgments on government action. You've just got to look at the numbers. So in the commodity space, love copper. I really think that the copper story is still there. Despite, the Chinese are releasing the stockpiles on copper, and that's fine. But, if Freeport-McMoRan, plus the copper mine, or, the general copper indexes or copper futures, I think are a great place to go. I'm really bullish on uranium. I think that it's a really silent market. Over the last sort of 11 years, that it's just been decimated, absolutely paneled. It just looks horrible. But since the beginning of the year, it's really come back. So we've got some trades on in the uranium space. I still like the idea of corn. If you think about just eating, I go down to my local supermarket and I can see that the prices of, normal foodstuffs is getting, it's going up.
They use corn for everything,
Yeah,
syrup,
absolutely.
and they put corn syrup and everything. So.
Corn, orange juice, coffee, all of those things are going to have, price rises over the next couple of years. So I'm quite keen on the agricultural commodity space. I think in the sort of short duration, I think you've got to be really conscious of NASDAQ hitting this all-time high and trading around the all-time high. Can it be sustained? I'm in two camps. I'm short-term bullish, like the next 14 days, but over the next 3 months, I'm a little bit skeptical.
I think there's going to be a correction of some sort.
Every year in this season, what I've felt over when I look at my trading records over the last couple of years, always between July and September, things start getting a little creaky. Suddenly what worked really well in the first 2 quarters of the year suddenly stops working. And you've got to adjust the way that you trade, not just the way you trade, but how you approach the market. You can't just go, oh, well, I'm going to be bullish, and you've got your hammer and everything that you will see is a nail. Like you're going to have a lot of broken windows if you do that. So you've got to really try and look at your trading strategy and say, you need to mix up your book a little bit on the bearish side, a little bit on the bullish side, some directionally neutral. Try not to be too directionally biased, because if you start taking opinions, if you start weighting your book too bullish and the market sees a correction 5 to 10%, those option trades are done. You're finished. So you can blow up your account that way.
What strategies do you like to do for, say, like adding some bearish exposure? You like call spreads, or
bear put spreads tend to work for, in the money. Bear put spreads can work out 90 days. I'll probably start putting on a few bearish type positions probably towards the end of the month. For the time being now, I still think the market shows opportunity on the bullish side. So a lot of these longer durational trade bullish put spreads, however, we don't want to hold them for too long, right? So what I'm going to do is trade them, but I've sold out 30 days, I'm going to cash them in 10, right? So I'm not looking to make 60, 70% profit. I'm looking to make 30 to 40% in the next 2 weeks on short spikes in volatility to the upside, cash out, and move on. That's the first way. The second way is I'm not a fan of directional long puts on a market that's been trending as strongly as we have. Mm-hmm. You always have to look at the underlying trend over the longer term. So if you're taking a bearish view on the market, you've got to be careful of the duration of the trade that you put in place. So you could still be short-term bearish and medium-term bullish and still have maybe a call spread on the one side that takes care of the bullish view. You could have a put option on the other side taking care of that short-term bearish momentum that might come out. So it's just a matter of, you can use a couple of these strategies, credit call spreads, bear put spreads, long puts. You could do all of those. It's just over what period you've got to be very clear about. Don't take a view that, oh, well, that's it, the market's done, it's going to zero, and then you load up on the bear side and the momentum just carries on going up. Remember, the market is designed to go up. This is the thing that makes short side trading really difficult, is that you're going counter the way in which the market is designed. So when you go against the flow of how things are. You are competing against forces that you might not have enough money to compete with. So you've got to be fairly high in your level of conviction when it comes to trading to the short side. Remember, with the short side, it's like an elevator. So when it falls quickly. With the market going up, it's sort of like the stairs. We take this sort of gradual move up, but when it falls, it does that.
Do you like to play I don't know, like, do you ever do any really like short-term put trades on, say, like a reversion to the mean? Like,
I find them, look, personally, I find them hard to trade. The thing that I find difficult is that if the underlying trend is up and you're trading a reversion to the mean from, say, the top of the Bollinger back down to the middle, it can become quite difficult for timing, because prices can stay extended. And you can see this whenever you look at an RSI graph. Stocks can stay overbought far longer than you can logically look at it and say, why is that happening? Why is the stock overbought? It doesn't mean just because it's overbought that it's going to fall. Doesn't mean that at all. So timing is really, really difficult. So sometimes if you've got, say, the 8-period moving average underneath the 21, you can short rallies to the 21 as long as the 8 is below the 21. Like, that's, it's pretty common sense. If the faster moving average is underneath the slower moving average, momentum is to the downside. But it's always a tough conviction, because visually, when you look at a graph and you see a stock rising in price, your sort of subconscious is saying, oh, it's getting better. It's rising. Things are looking up. And then all of a sudden you buy at the crossover of the 8. So let's say the price goes over the 8. You then go long in that trade. And suddenly, because the momentum was to the downside, the path of least resistance is to the downside, stock starts to drop. And you go, crap, I shouldn't have done that trade. It's like, and then you get these regret trades. I hate them. At the beginning of my career, I had so many of these regret trades. Like, damn it. Why did you do this? And a lot of new people feel that. It's like, why did I trade today? Why did I get suckered into buying this at the high? And that's why we paper trade, because we want to try and control that emotive response to what we see on the screen. Just because the price is rising doesn't mean you buy it. You never buy when the price rises. You buy when the price pulls back. So you've got to train your brain to see buying opportunities when the price drops, not selling opportunities when it drops. Like, this is the hardest part of trading, is almost to go counter to what your brain would look at and go, oh,
that's like you're learning how to do box or kickbox, is like not flinching away from punches that are coming. Yeah, you got to go into them, or or around them, and then you
don't block with your face.
Yeah, you move your head and then counterpunch instead of. So yeah, I mean, I get it.
That's my latest technique. Is called the groin block.
The groin block. You just jump up and you just catch everyone with your groin.
No, I just stand there and spread my legs like one of those Shaolin monks, and you can just smack it like a brick.
That's like those dudes, the karate dudes that will then, like, sucking their testicles up inside them and letting the football players, the hunters. Have you seen what I'm talking about? Like, I mean, I'm like, I don't know. I have my opinions on martial arts, but I think that you would spend, I would rather spend more time learning how to defend than conditioning my testicles.
You know what? I have to apologize to anyone who's watching this, because this is now the second time that we've gone from talking about trading to nut shots. It's like,
it happens.
Apologies, everyone. Apologies.
It happens.
I agree. I've had more than enough nut shots, even in jiu-jitsu, with that knee slice pass when someone sits in my guard and lifts up his knee. I'm like, okay, yeah, just come through. Just
come on in.
Yeah, I'm not defending anything. It's like, just come, there's nothing worse than starting a jiu-jitsu match with a deep voice and then ending it at the end like this. You can't do it.
Yeah, for sure. No, it's like sometimes it's probably like in trading too. It's like sometimes you get a win, but it was just so much work and painful. Like, you get a knee bar on somebody and it's just, you're like, oh God, I hope they tap, because I'm going to be, like, I can't take this anymore. It hurts.
I was reading a comment on a Facebook post the other day of some dude. He was a 2-stripe white belt, and he was like, There's this long post on Facebook. He's like, I got this purple belt and I put him in a guillotine and I was yanking it and I had it. I mean, like if he was talking, he would have been talking like a horse racing commentator. He's like,
like play by play.
Yeah, play by play. And he's got this guillotine on, and he says the purple belt muscled out and then proceeded to stuff his shoulder into my face and like, is this purple belt guy just a dick? Blah, 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 blah. And like every single comment after that was, the guy wasn't a dick, you were. Like,
you asked for this.
Yeah. Like, since when is it okay to smash the crap out of some of these higher belts and think you're going to get away with it? Like, that's how you learn, like.
Well, that's the thing with the jiu-jitsu and with the options is the consequences are immediate. The feedback is immediate. Like reality,
absolutely.
If you either make money or lose money. You either do well on the mat or you get smashed. And it's like if you do the wrong thing, the people take advantage of it and just crush you.
Absolutely. You know what? And that hits the nail on the head. People often come into options with large accounts, and I've seen this many, many times. Big, people come in. Oh, you know what? I've got a $100,000 account. Okay, cool. All right. For some reason, I don't know what it is, but those guys tend to often think that will give them a license to make stupid mistakes. And suddenly you see these people start off with a lot of money and then they drop down. Then suddenly, 100 down to 75, down to 65. And now you've really got to grind your way back to 100 from that 65. And if you haven't learned the processes, you can chop around that $65,000 mark for the next year to 2 years while you're learning. And I always say to people, take your options trading really slow, because if you do the paper trading, okay, granted, it's like paper trading is like fighting a dummy in jiu-jitsu. You don't get that physical feedback, that emotional feedback, the pressure, the adrenaline, all of that when you've got real money. But there's a certain technical element that needs to be done. And if you don't have that technical element, and people say to me, oh, but a trade's a trade. They often come to me and say, oh, we just need your trade. No, what you don't need is my trade. What you need is the emotional control that comes from looking at data and being rational. Many people think that having a big account, they can be excused from being rational. Like that's the problem, right? People lose their sense of rationality whenever they have lots of money. Let me just throw $1,000 onto this trade and hope for the best, because
that's like you go buy a $500 gi. It's going to make you an awesome grappler, Chris.
And exactly the point.
And buy more gear.
Yeah, here's your new. I can't even remember the name of those fancy gis anymore. The one that was. I had one guy wrestle with me in one of the. What is the name of that really fancy gi? The one that cost like $600.
I don't know.
It's like a Ferrari of gis. It's like it was so nice to grapple with him. When he went in side control, he was a white belt at the time.
Mm-hmm.
He would go in side control of me. I wouldn't move. It was like being enveloped in a really nice blanket. I was like, oh, this is cool.
It was like one of those like toilet paper commercials.
Yeah, it was like. Yeah, absolutely. Just don't breathe on my neck. Otherwise, I'm going to Ezekiel you or something.
Yeah.
Don't breathe on me. But yeah, those gis with that really nice material. I've got a really old school Brazilian gi that I got in Brazil sometime in the 90s. I mean, this thing is as tough as a nuclear holocaust. It's like the cockroach of gis. It will survive everything.
I think that's something. We could get off on jiu-jitsu for forever. But yeah, I definitely think the people think that they can make up for lack of skill. I've seen this, like what you're talking about with the options, with the money. You've seen it with jiu-jitsu as well. Mm-hmm. I've taken some firearms courses and watched as people with all, that basically they were really out of shape. They couldn't even run to cover if they needed to. Like, and they had all this stuff on their guns, like that would fall off, and they didn't know how to use it. So it's like it's got like a laser and some optics and this handle and this little doodad, and they can't even they don't even bolt it on there right. They've never used it. It rattles off, falls, it breaks. It's like just
man,
just
options,
learn how to shoot first.
I have to say though, options trading, it's almost like the way in which people identify themselves, like I've been doing this for 20 years. I can't even identify myself as an options trader. I do it, but I would never define myself as one because I know there's so much still to learn, and I've done this for 20 years. There's nothing more embarrassing when you see some of these clowns come in with a lot of money, call themselves an options trader, and they just lose consistently. It's like, come on, dude, like go look in the mirror a little bit and realize that you're not, this world is so complex, so complicated. And if you're doing it wrong and you don't even know you're doing it wrong, then you're on your own. You got to seek out ways to improve yourself as a trader. And lots of money doesn't guarantee success at all. Just look at those guys that were shorting GameStop. If you want to see the epitome of arrogance, have a look at the short sellers on GameStop and how those guys are down 40% for the year. And, how those guys get funding. I don't know. I give up. I honestly give up because it's proof that there's a certain correlation or negative correlation between wealth and intelligence. Like there has to be, because those guys just lost 40%. They just lost 40% on probably one of the dumbest trades of the year, right? Like if you know that there's 7 million people that are sitting on the outside that are going to be pumping the stock, why on earth would you be shorting it, right? Like crazy. But they still got more. They went back to their masters and the masters gave them more money. I'm like, I want that gig. Like, that's the gig I want. Like, why is it that we can't have that gig?
Weird that there's no consequences. I mean, for their jobs, it's really. I think that when you're talking about people trading with lots of money, is that if you have an excess amount of money, you're not very careful with it.
Yeah,
so,
because you become easy go, man.
You're right. I think it. If it means something to you, then you're going to pay more attention.
Yeah.
And learn the skill. But
absolutely,
that's like to go back to another jiu-jitsu analogy. Like you get somebody who starts out and they're naturally athletic and they played a sport and they're really good. They don't pay as much attention to technique because they think they don't need it because they're just beating everyone. And then they realize this like scrawny kid is just soaking up all the technique, and then eventually turns into a beast like a spider monkey. It just chokes them all out. Because he never had that to rely on. Never had excess amounts of athletic capital that he could draw.
I'm 100% with that. It's like you often find people, and maybe this is a problem because of all the advertising that happens on Facebook. This is easy. All of these hack this, hack that. I'm so tired of hearing that. It's like, the only thing that you want to hack is your head off its shoulders. I mean, like it's really, don't be fooled. This game is complex and it's designed to do one thing. It takes money from the dumb and gives it to the smart. It's that it takes money from the people who are ignorant and gives it to the people that are not ignorant. It takes the money from the impatient and gives it to the patient. That's what happens. And you've got to decide when you approach your trading is which camp are you going to be on? Because the camps are not evenly distributed. It's not a 50-50. It's a 10 and 90. You're going to trade on the 90. You want to play in the Reddit game and, go and give yourself a medal of honor if you've lost 100 grand. By all means, go and do that. But that's the pond you want to play in. Fantastic. It's not a very successful pond because that pond never talks about the people that have actually lost money. Like the stories about, the guys who mortgaged their houses and their parents' houses and lost money. I'm like, man, this is crazy.
It's really bizarre.
That's why, like I always say to people, just caution is always the better strategy. Like practice. Like, if someone was doing jiu-jitsu and they were losing every single match in a tournament, what do? They go back and practice, and then you practice on your weak spots. It's the same thing in trading. You find the trade strategy you're not good at, work on it until it becomes your strength. Then you can apply that to your game. Now you can make money on it. You don't just go, oh, let's see what we can do. And then, lose money and go, oh crap, now I've got to find somewhere else to go and try and earn that back.
Right.
That's not a constructive way of building your account. All you're going to be doing is trading water.
Right.
You have to look at building things, and building things starts in your head. and how you approach it. So I always say to my clients, trade to an outcome. What is the goal that you are looking for? If your goal is, I want to knock, 30 trades a month out of the park, that's going to be hard because you don't control that. The
Right.
market will give you what it gives you. If you say, look, my goal is to make $1,500 a week, and I'm going to use as little capital as possible. I've got this much money, and that means I don't use all of it. I only use a portion of it to generate the return that I need. Now you're getting somewhere. Now there's something that you can work on, because
reverse engineer what you need to do.
Start from what you're expecting and what will success look like, and work backwards. That will then tell you how your strategy should work. Not, I've got 100 grand, what can I make? I mean, the amount of times I get people calling me to say that, I'm like, look, you can make whatever you want. I mean, but what you're saying is such a stupid question. What I'd rather you said is, what do you need? If you need $3,000 a week in order to live, we can build something for you that says, this is how you're going to have to trade if you want to achieve that, using this much capital, this many trades, this strategy, blah, 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 blah.
Mm-hmm.
But, most people don't want to do that work. It takes time,
Right.
It takes time.
Well, no, that's what I like about the things we're doing with the Alpha Hunters at Rogue, is that it's not just trades; it's an educational process too. So obviously the trade profile, the portfolio is doing really well. A lot of winners, a lot of profits so far. But anybody guys want to go over and check it out, Rogue Investing /Alpha, and check out Chris's stuff with access to webinars and all that stuff. So
yeah, it's an important thing to always remember with trading. It needs to be something that can operate independently of others, because at the end of the day, you are accountable for the keys you hit on the keyboard. And I can't hold the hands of everyone that I teach, but if I teach them how to control themselves so that they don't react to things, man, then the job is done. That there's nothing better for me when one of my clients will call me and say, hey, I did this on my own, what do you think? And it's like a perfect trade. I'm like, wow,
right.
If there wasn't COVID, I'd give you a chicken fried hug or whatever it is. It's
Awesome.
It's really important. And I think that's what I want to try and do with Alpha Hunters, is teach people how to be independent so that they can apply their minds as opposed to just applying their capital. Like, there's a big difference between that, right? So you have to really work this one out.
Nice.
It's going to ring in 10 seconds, my friend.
All right, Chris. Till next week, man. Have a good day. Have a good week.
Nice to see you again, my friend. I'll see you next week.
You too. Take care.
Take it easy.